What is an IPO? Why do companies go public? And why are many Sri Lankan companies opting to take this route of financing? To gain a deeper understanding of the matter and prevent misinformation, let us break down the myths, benefits, and process of going public. An initial public offering, or an IPO, is when a privately owned company lists its shares on the stock exchange in order to raise capital or provide liquidity to its shareholders. This listing on the CAC makes the shares available for purchase and sale by investors, stakeholders, and the general public. Let us break down the myths surrounding going public. Myth 1. Once listed, current shareholders lose ownership and control of the company. However, this is not the case. The decision of the stake that is being listed lies in the current shareholders, and if they require majority control after listing, the IPO could be structured flexibly to meet this requirement. Myth 2. All information relating to the business must be disclosed to the public once listed on the CAC. However, companies are not required to disclose trade secrets or any such information that gives the business a strategic edge over its competitors. Instead, the company only needs to communicate certain pieces of financial and non-financial information in order to keep all shareholders informed of business progression. Myth 3. Adhering to the listing rules is costly and does not add value to the business. However, the reality is that the corporate governance and reporting practices recommended and required by listed entities facilitates sustainable and sound decision-making. It also helps create confidence among public shareholders, which in turn contributes to the performance of the share and greatly benefits the business in the long run. Benefits. From a strategic perspective, there are many benefits of going public. An IPO can achieve several different objectives, including raising capital for the expansion of the company or for new investments, retiring existing debt in order to improve the company's financial position, providing liquidity and an opportunity for existing shareholders to exit via a wider investor base, and finally, facilitating price discovery for the shares of the company. Companies further enjoy a number of indirect benefits by going public. Firstly, the subsequent raising of capital is made easier due to the company having access to a wider pool of public capital. Companies are further able to increase publicity and brand awareness, enhance reputation and credibility, attract new customers, and recruit and retain new talent due to the high level of brand building that occurs during an IPO. The listed share of the company can also be used to incentivize and align the interests of the employees with that of the company. All of these direct and indirect benefits of going public will be of great value to private family businesses. Process. Transforming into a listed entity is a structured process requiring significant preparation prior to listing and the dedication of resources post-listing. IPOs typically function in 3 stages, with companies generally engaging the services of an investment bank to manage this process. During the pre-IPO stage, companies run through a step-by-step process with the assistance of their investment banking managers to ensure they optimize the value of their IPO. Entities must first determine their IPO objectives, evaluate the cost of an IPO, and appoint IPO managers, registrars, lawyers, and bankers to the issue. Then, an equity story must be developed. Subsequently, companies must select a strong and effective set of independent directors to join the company's board of directors and realign their corporate governance in line with the requirements of the CAC listing rules. They must then prepare the IPO prospectus and marketing materials and submit their initial listing application to the Colombo Stock Exchange for approval. Once the company receives approval from the CAC, they begin their IPO campaign, conducting roadshows and PR activities to attract investors. They then finalize their offer price and dispatch their prospectus to potential investors, followed by the opening and closing of subscriptions and allotment of shares to investors. With the commencement of trading of the company's shares on the CAC, the IPO is concluded and the company continues its journey as a listed entity. Going public involves a range of activities for which the company does not need to dedicate additional resources. Choosing reliable, experienced partners to facilitate the journey will help companies optimize the value of their IPO and reap the full benefits of going public. Asia Securities employs a passionate team of professionals who will guide companies through this tedious process. With strong relationships across all stakeholders involved, the team at Asia Securities will seamlessly manage the listing process with minimal effort or disruption to your day-to-day business activities. As a leading brokerage house in Sri Lanka with access to a wide range of investors, Asia Securities has a strong placement capability. This enables us to obtain the right investor mix and optimize the value generated via your IPO. In addition, Asia Securities will guide you through the post-listing requirements and support you with handling investor relations so that your ongoing journey as a listed company will be smooth and hassle-free. Please reach out to our team of experts at Asia Securities to guide you through the journey of going public.